Joseph Gozlan with Eureka Business Group, and today we're going to talk about our part one in the series talking about multifamily financing. There's a lot of options in multifamily to finance your property, so we're going to review the different parts. In the different parts of the series, we're going to review the different options that you have, and today we're going to focus on local bank loans. Local bank loans are usually used in this industry for smaller loans. Anything that is a loan balance under $1 million, you're probably going to have to work with a local bank loan. There's a few exceptions where you can get a small Freddie loan for $900,000 loan balance, but these are pretty rare. So let's focus on the local bank loans for this kind of properties. There's advantages and disadvantages in working in local bank loans, but let's first define what is a local bank. A local bank is usually a bank that has a few branches. It's not national. It might be a regional bank, like in 2-3 states that are neighboring, but usually it will not be national. It could be just one branch. It could be a local credit union. Any one of those could be called local bank for this video. So what is the advantages of working with these guys? Well, the advantages are that they operate like old school banking. It's all based on relationship. You have a relationship with the branch manager, you have a relationship with the commercial lender in the branch, and they're more looking at you and your relationship with the bank, like is your personal accounts over there? Is your business account over there? Are you going to bring that rent into that bank for deposits and so on? So they're more interested in the relationship than they are in any specific metric like your net worth or this or that piece of information about you. So that's a big advantage, because if you build that relationship, you can get a lot better terms and you can get a lot more creative financing. So that's advantage number one. Advantage number two, most of these loans do not carry a prepayment penalty. So if you buy something and then you have an opportunity to sell it after 12 months or 18 months, you don't have to be worried about a big penalty that comes in because you sold the property. So that's a great advantage with the local bank loans as well. They're easier to get into, they're easier to work in when you're servicing the loan, because again, it's all based on that personal relationship you have with that bank. These are really great advantages when you're working with a local bank. The disadvantages of working with local banks usually comes in the terms that they offer. The interest rates are going to be usually about a point or a point and a half higher than the agency debt. So if you compare local bank to Fannie Mae, you'll see almost a full percent or 1.5%. It's sometimes difference in the interest rate. They're also going to be lower on the amortization rate. So usually the local banks will give you loans for 20 to 25 years max. I've seen some rare occasion where they were willing to go to 30%, but that's not very often. So that's a very important thing to understand, because it impacts directly your bottom line because of the lower amortization rate. Another disadvantage of working with the local banks is the fact that they are full recourse loans, which means somebody has to personally guarantee that loan and that person is on the line. So that usually takes that off the table when you're dealing with limited partners, with a syndication kind of format. Those partners don't want to be personally guaranteeing the loans, so that might be a challenge, taking a local bank and try to do a syndication. So these are the big disadvantages of working with the local bank loans: the interest rates, the amortization rate, and the full recourse. So just to sum it up, there's some good things and there's some disadvantages on working with a local bank on a loan for your property. Sometimes they are going to be even faster on getting that loan done. Some of them are going to be able to roll some of the rehab money into the loan and guarantee they're going to be a lot easier to work with than Fannie Mae or Freddie Mac servicers. So I say that let's not take it off the table all the time and go straight to agency. If you're on the borderline of about $1 million loan or below, definitely take a look at a local bank. One more thing I want to make sure I kind of mention on local banks. I know we usually talk about multifamily, but local bank loans are really a great option for other commercial stuff. So if you're buying a shopping strip or a retail store standalone or a medical office, those local banks are going to be able to step up and get you good rates and good terms for that property, because Fannie and Freddie are not doing retail, they're not doing medical office. So local banks are going to compete against CMBS loan and life insurance on these loans. and they're going to be able to be pretty competitive on these loans as well. So that's it for today. Thank you so much for watching the video. If you have any questions or if there's anything else that you want to ask and have us do a video on, just put a comment in the links below and we'll be happy to do that. I'm Joseph Gozlan with Eureka Business Scoop. Our website is ebgtexas.com. Thank you for watching.